everyone. Alright, so in today's episode, we are going to be talking about how you can trade gap ups in the stock market. And gap ups are how many day traders and swing traders, make their money. It's a certain strategy, and we're just going to be talking about how to trade those gap ups. So, why they call them gap ups are because they gap up during pre-market hours. Now that's customize this grid real quick and get rid of these. Alright, so now this looks a lot cleaner for you guys. Alright, so as we get a stock like AWX that's gapping up pretty significant, it's from almost 290 to 280. So let's change the drawing tool down here, and let's see how much it was gapping up today. Alright, so it's over 40%. Alright, so it was just shy of 56% when the market opens, and that is perfect because we're going to be doing the strategy called the gap and go setup. Now this, like I said before, this is when a stock goes up more than 4%, so you can really do this with any number of gap ups. This stock has been crazy active the past couple of days, and went from $2 all the way up to 36, then fell back down to about $2, and is slowly working its way up. So what you do, as you see it gapping up pre-market, so this is what you're seeing right now. Alright, now you're going to say, okay, the high is 489, so you're going to say that is going to be our entry, because when you want to gap up, when you do your gap up, you're going to be looking for continuation and momentum, and as it breaks to new highs for the day, it's going to get a lot more volume and a lot more people are going to check it out. And you're going to set your stop one candlestick below it. We'll show you where you're going to set your stop here. Alright, so market opens. Let's zoom in here. Market opens. So we're going to set our stop. You see this support right here at around 450. That's where we're going to set our mental stop at. So if it breaks through that, then we know we're going to have a reversal, and it's going to start really just kind of getting crashed down, because a lot of short sellers see that as an opportunity to jump in. So we marked out our highs. So that's where we're going to hop in. And even if you want to wait for confirmation at $5, that is fine, because $5 is a whole number, and whole numbers tend to be a very good support level. So, alright, so let's say we hop in here at $5. Now let's, oh, my mouse here. I think my batteries are starting to go a little dead on me. So let's change the drawing tool here. Oval. Alright, so let's say we hop in here at this $5 area. And now all we're going to do is just continue to ride momentum until the first red candlestick breaks through the green. So we're going to actually hop out here at around 5:30. That would be our good entry, or a good exit, excuse me. And now what we could look for are bull flags. So a bull flag is when it goes up and then consolidates and continues to go up. And like I said before, that $5 area seems to be a pretty good support because it's a whole number. So, and we're already out of it, at 5:30. So just from this trade, let's see how much we're up. Alrighty, so 5:30. Alright, so we're up, 6%, 7%, which is fantastic. And now we're going to hop in when the first green candlestick beats the previous high of the red for this bull flag right here. That's alright, so the first green beats the high of the previous red. Alright, so right here you see this green candlestick's beating the high of this red. So this is going to be our entry. Whoops, I thought it was on oval. Hold on. So right about here would be our entry. And The reason why this is a good entry is because that is when buyers tend to enter and you can always check that by the time and sales. You can always put time and sales off in the corner like such, just to keep an eye on it. That's what I would do, and then keep that like that so you guys can buy and sell. But I use SureTrader, I use Thinkorswim for my charting. Alright, so now we're in, and now what are we looking for? We're looking for the first red candlestick to break below the previous green. So all we're doing is just continue to hold the stock, continue to hold it, and then bam, right here. I believe it might be right here. Yeah, so 620 would be our exit, and that, I believe that will be about a 7% gain. And what you never want to do is never want to do this 3 times. So this would be our best one. This would be a 13% win. You never want to do this 3 times because on the third, it tends to be a little more sloppy, and it's really hard to find confirmation. I mean, because see, I've said this 1,000 times here in my previous episodes. Alright, let's zoom out. So this is where we took profit, and yes, we could have sold almost at, $6.79, but you're in an ideal world, you're never going to find that opportunity. It's just not going to present itself. So, and the reason why it becomes sloppy after the third is because this is when you get around that 11 o'clock to 10:30 area, and this is when a lot of sellers or a lot of buyers tend to leave the markets. So as you guys can see, we had this huge push up, and then we had this fall. And that's expected because this stock was moving very fast in a short amount of time. In one candlestick, it went from 623, and it was at 530. So almost a whole dollar it moved in the matter of 1 minute. So you just got to be careful. Trading these gap ups. And you always want to make sure you have a stop loss, and that's why I said you always want to have it below, have them below those red candlesticks, because, it would be these stocks could fall very, very fast. Alright, so that is how I would trade gap ups, and that's how I do trade gap ups. I hope you guys enjoyed this episode. Please sure to hit the subscribe button down below. Thank you guys for watching. Remember to always stay happy and stay positive. Peace out. Good night.